Hey, Steve. How was Tuesday?
Interesting Tuesday. Thank you, Scott. We'll get right into that in a minute. Hello, Andy and everybody.
Hey, Steve. Hello, Scott. Hi, everyone.
All right. Pleasantries aside, as people begin to file into our weekly Trade of the Week webinar, it's been 2 weeks. We were not with you last week, so we've got some good pent-up content for you this week. We'll just get through the intro slides here, just the disclaimer to make those legal people happy. That we're going to talk about some ideas and some concepts and maybe some opinions, but none of this should be construed as financial advice. We're not brokers, we're not registered investment advisors. So just our opinion, not the opinion of the company. So exception, and we're addicted to it, really no other way to put it. How to view the recording, it'll be up tomorrow on our YouTube channel. Mark, we recognize that a few days of evaluation just really scratches the surface and doesn't give the product justice. It takes a good couple weeks and even a full month to kind of get a good feel for how to communicate to get what you want, whether you're a swing trader or a momentum trader, low floats, short squeeze trader, what have you. You can fine-tune trade ideas to bring you what you want to see in real time, and that's where we outshine everybody, real time. So we want to try and get you guys up to speed and shorten the learning curve as much as possible. The best way to do it are the trading room daily and these webinars, of course. But more importantly, we make ourselves available every 24 hours on the daily support session. And the way in which you can get there is either bookmark the YouTube if you've been there before, or just go to trade-ideas.com live, and that'll redirect you to the live stream. We basically have 5 different guys. I do it on Tuesdays, Andy does them on Fridays. Sean, who's the options expert. You know, if people have options questions today, I'm not really the one to ask, and neither is Andy, but Sean can give you a great discussion. You just got to tune in on Mondays at noon. So we're available noon Eastern every day for an hour at that YouTube link. You can type in questions. We can work on scans together, send you back the code. It's really the best way to do this kind of stuff. And so we feel that we want you guys to show up and give you the support you need to make sure that this learning curve is not too intimidating for people. So that brings us to our weekly theme, and it's just such a good one. I'm never going to change this, just to remind people that, you know, we can't just rely on algorithms and technology and machines to do our work for us. It's just not that simple. The power of machine is working together with the human being, and let the machine curate the ideas, bring them to your forefront, and let you put those through your other lens as a human being lens that the AI lens can't necessarily see in our examples. And it's a good symbiotic relationship. You know, as Andy will probably discuss again, the value of our AI is in the entry, the real-time entry in the idea, and locating a stock to play. Are the entries perfect? Hell no, they're not even close to perfect. Excuse me, the exits. Are the exits perfect? No. And some of the entries aren't even that perfect. You know, there's a lot of times I've shown people, if you use a couple of simple indicators, if you're a little patient, you might even get a better indicator than the AI Holly sometimes, or entry, I mean. So it's a symbiotic relationship, and that's always a good way to set the theme for the Tuesday webinars. We'll talk about the market recap. We're at a very significant road here. I'll explain why. Probably a short AI recap from Andy. We've got 2 weeks of Trade of the Week to discuss, both doing fine. I always like to try and throw in something, you know, that the platform has that people might not have been aware of, and that'll be the pre-market filters and how you can use those during your regular session. I've got a couple alerts. You know, I went through a lot of scans. I only found 5 or 6. And we'll set those, but I want to point out something in the sectors that I noticed, kind of interesting, a couple things. To continue in the theme, last week, you know, if you were here last week, we had a fun little game called the Time Machine. I don't know if we'll do that this week, but you go back in time and you kind of look to see where the proper exit might have been to save you a lot of headache and a lot of losses. That was a fun exercise. We'll do that again in the future, but we're going to go through my positions again. I'll show you what I currently have as a swing trader, what my thoughts are in each one of them, where my outs are, and what my reasons are. And then if we have time, maybe 4 or 5 chart requests, always just to kind of round things out. So make sure my mute is off, because I'm really good at turning that off when I cough into that thing. Let's start with the S&P 500. The benchmark, which is interesting, I noticed, I don't know if Andy, if you're aware of this, the S&P was really flat on the year. Let's take a look on that. Where was January? Right about there. Why are they saying the spiders were flat on the year? I don't know why I saw that. They seem like they're up on the year. That was odd. Let's get to our proper chart with our moving averages. There we go. Okay, there's a lot going on here. And what do I mean? The last time we spoke, you guys heard me just saying ad nauseum, no bear case in sight, just ho-hum, grinding higher along the momentum line. And then occasionally I'd say, oh, we got a little too far away from the moving averages. We got to prepare. Oh, and there it was, a pretty bad fall down. But let's go back and analyze this a little bit. Big recovery day, day and a half, to the downside before the buyers stepped in here on this day. And the important thing is I'm always looking at the close. That theme will always come a lot when you hear me talking about daily candles. We got to wait for the close. And this close was a pretty good one in terms of like a stick save. It could have gotten much worse, could have gotten away from the buyers, but the deal is the buyers are so conditioned right now to buy the dip. It's all they know, and it's all they will continue to know until things change. And even then it'll take some of the harder headed ones to turn things upside down and change their ways. But as we move forward, it felt a few days, we broke below. Okay, that was a bit concerning, and then popped back up. All of a sudden now, we're on the other side of the mountain, as they call it. That's probably a great analogy. This side of the mountain, and we broke. We're on the other side of the mountain where everything's a little different over here now. The price is now being forced back down. It's got a lid on the price on that 20-day moving average. Well, that's not good. A few more days, okay. It looks as if the 50-day moving average is in play. So that's probably our base. Bounced right into today. Interestingly enough, Andy doesn't know I'm going to do this, but we had a little conversation earlier today. Does this look familiar, Andy?
Yes, it does.
Is going to fail right here, 10:20 Pacific, 1:20 Eastern. And the reason I said that is I was noticing this action up here. It was just a lid on this. Okay, so what does that mean? Let's translate that and transpose it over to the daily. Well, just as I feared, this crossing 10 crossed the 20 last night, and it's got a hold of the top end of this wick. So we looked a little uglier this morning in that we did fill the gap, and that might be the good news for the bulls. But here's the deal. There's nothing resolved right now. We have a big thing coming up. It's going to be a wedge between the 50 and this declining 10. Which way is the price going to resolve? It's either going to continue, which odds typically favor resumption in the same vein. But if it doesn't work, we've got to be aware of it. And the moment, and I told Andy too, we're going to clear the decks probably in our 401ks of things that aren't working well. The moment the price decides to close under the 50, because it once was a safe haven there, if it fails that second test and we get a close below the 50, you're going to see me thin out of a lot of my long-term stuff if they're not holding up well. I have a lot of silver and gold, and they might have a different tune, but things like JetBlue and other stocks that are going to be susceptible might have a rough time. So that's what I'm watching for. That's where we are. There's no way to call which direction we're going to go other than the path of least resumption is usually in the same direction. So that could be the case, but if not, pay attention to the close below the 50. And have a funny little analogy here. When I pulled up the cues earlier, I felt like it looked like Elf on a shelf there using 50. There's his legs dangling over the 50, and he's just sitting there on the shelf with his arms folded saying, I don't know where I'm going. But once again, same kind of thing is going to happen here. What's going to happen when these two moving averages start getting kicked around? I think that's where we are, guys. Again, pay attention if there's a close below. Odds favor a move higher, but you never know. You never know. I'll get to some of the other sectors later, but we got to move on. Anything you want to add on the general overall picture here?
No, I'm getting a lot of mixed signals that, I don't like the price action of a lot of stuff, that I'm in. It's just I'm not getting the same kind of follow through. So, and watching Citibank just fall out of bed the last 2 days. Always get a little nervous when the financials. Just are you going to talk about that, or just not pull it up, show them?
No, we'll talk about that when we get to the sectors. I'll pull it up.
Okay.
But this is a premonition of
and I start seeing things like that. Yeah, yeah. I get nervous about anytime I see financials just rolling over with that kind of volume. Big drop in 2 days. We'll see if there is anything to that. Time will tell. But then you look at the VIX and there's no fear. So it's like it's pretty crazy right now. Uh, once again, mixed signals, and I think Steve's right. You sit back, you thin out, and you wait for it to play out. Thin out and play out.
Yep. So we'll get to some sector discussion later a little bit, but that's all I've got for the market in general,
right.
the backdrop. So if you want to take it and talk about
I'll
anything you
take it.
see.
There's not a lot to talk about again today. And so what I am going to talk about is these are the Holly trades right here. And not much to write home about. I noticed a lot of early trades, failed in the first. I remember Barry dropping it in our little trader chat that we have on Slack. You had 5 trades fire off in the first almost 10 minutes of the day, and they were all stopped out in the first 20 minutes of the day. So you see things like that. Honestly, I usually tell people I'm not one to trade Holly in the first 30 minutes. I like to see those pullbacks, pull back long and pull back short. I think I was doing a one-on-one today with somebody, and I was telling them those are the ones I like to see. There's one Lennar that looked like it was trying to work, but just never could get any downside movement, but worked for a little bit there for. Oh gosh, that was for the tune of like $1.50. So I guess it did. But nonetheless, what I want to talk about today is kind of what's going on. We have some more parameters that we're going to be introducing to the AI, and don't get excited because I'm not telling you it's coming around the corner, anytime soon. There's no ETA on that, but I know our focus has been on giving some better risk parameters. We've been wanting this for a while. I think you guys have noticed it as well when you see some of these $70, $80 stocks that fire off with a 25-cent stop. That it's just we're going to be introducing better risk parameters. Eventually, we are going to have a swing trading Holly. So once again, I'm not trying to tease you, so don't send us lots of emails say, hey, when is this coming? I heard it was coming. This is just what we're working on, and so I just want you to know there is going to be a new and improved Holly coming around the corner, and I'm not apologizing for her because overall she has still performed well. She just hasn't performed over the last month or so like she has in the past, and a lot of it's just the time of the year. August, September, or till mid-September sometimes could be very tough for trade any type of strategies. The market is kind of wonky right now, so. Once again, I'm not making excuses for her. I don't need to make excuses for Holly. The numbers speak for themselves in our back office. But as of late, I noticed it just hasn't been performing as well. And I want to just share that with everybody that we will have some more risk parameters coming, coming down the pike soon. So, but Steve, yeah, there's not a whole lot to go over here. I'm just gonna, you can see the trades there. Just not a lot to talk about. Not a good day. Not a good day for Holly. I'll send it back over to you.
Okay. And I apologize, Joshua. I was replying to Mike about something off topic, and I see your question. I use position and range 10-day breakout strategy at the opening bell, and it did real good at price dollar amounts of 550. Oh, good to know. Okay, thanks, Joshua, for letting us know that. And you also have a little bit of info there on playing drums. All right. Let's get back to what we're going to talk about here. Trade of the week. So last week we were away, and I'm going to give all 100% credit to Andy, who not only called this one and convinced me it was a great call, and he was right, also created the revenue growth fishing from which this scan came. We got a little tired a couple weeks ago of a lot of the upside momentum stuff just not really following through the way we wanted to, especially plug. That was a bit of a disappointment. But the idea behind this scan is, am I not showing my screen?
Yeah, I see it.
Okay, good. Somebody said, can you show on your screen? So the revenue growth scan is looking for companies that have all of a sudden turned the corner on revenue and maybe trying to break the downtrend. Well, PLCE was 2 weeks ago, and there has been no reason to get out. Now, I'm an idiot because I got out after about 3 days, and Andy was smarter than me. He got out pretty much
Today?
close to the highs today, yeah. I will say this, if I had been in, I definitely would have got out right here at this 50. I wouldn't have trusted that. I would have taken everything I had under my belt and said, I'll take that, and that was good. But nonetheless,
Look,
go ahead. Yeah.
No, I just wanted to say I did sell half at the 50, and then today I took the other half. So, but I don't regret it. But I mean, it's still in a downtrend, so you better be safe than sorry. Some of these.
Yeah,
the 20% gain. What do you do? I mean, gosh, you got to
exactly.
I'll break that nail every time. Yeah.
Yeah, after 10%, you want to start getting itchy.
Yeah.
And okay, speaking of itchy, just because it's a great example. When you're itchy, let's say you carried this thing all the way into today, and you sold a little bit earlier, but this is where I love to make my profit exits. Right here, that 15-minute candle after day and a half, almost 2 days of just adhering to this momentum line, it finally took a break. And a lot of times when you use that first closing candle, you can be one of the first people out as it starts to bleed off. But that's just for profit-taking mode. There's many different ways to exit a stock. All right, so that one's doing well. Honestly, I would consider reloading the boat if the market behaves and doesn't close below the 50 that we talked about. This could very much be in store, or it starts to become what I call the bird in the hand, where it just kind of sits there and just kind of waits for takeoff for maybe another round. I will be interested, and I'm sure Andy will keep that in mind. This week, the trade of the week was predicated, as I said, more from a top-down approach. We included the airlines, and we're going to look at sectors again here in a little bit. And a lot of times looking at sectors can be a great place to start to find trades, especially when you're going to use the similar tab, which I will touch on in a minute. So this is the ETF called JETS. It's just a nice look at the airlines in general, and we can see that's kind of got that bird in the hand look I was talking about, where you're just kind of going flat, looking for a reason to make it to the next level. Out of curiosity, what does JETS look like today? Trying to move up and out of that, a couple. I am long JetBlue and have been long JetBlue, and it'll probably be, we'll talk about that later, hopefully a longer term hold. I'm going to try not to get forced out of that one. But the trade of the week in this one was love. And it was selected right there. That's what it looked like. That green line is the trigger line. Let's get rid of that just to clean the chart up. And that is what it looked like going into the weekend. Perfect visual of what I like to see. A beautiful fanning out of the moving averages here. Nice space between all three. The price has been adhering to the 10 period just fine and pulled back. I think it got a little scared here of this 200-day creeping in. All right, pulled back, and that was hopefully a place that the price bounced, and it did. But we wanted a little bit more confirmation, so we waited for it to take out that round number of 40, in which it did, I believe, yesterday, pretty much on the open. And if we fast forward, we're grinding through. Now, it's doing what I fully expect. It's finding a little bit of resistance and could not find its way to close through the declining 200. So this play is really going to come down to kind of what we see in a lot of things right now. What's going to win, the 10 or the 200? Now, to clarify, the stop in this trade would be too tight right here. It really would. And we've talked a lot about how the 20 can become a backstop sometimes. So we're going to use this rising 20 period as the stop. Ideally, this makes a very easy trade for us and cuts through like butter. We don't have to worry about it, but don't get, alarmed if it maybe goes nowhere tomorrow or nowhere the next couple of days. Might looking for a better grip on the battering ram to push back through the 200. That being said, if we can get through the 200 and close above the 200, this one could be one to hold on to. I mean, I think the airlines are going to come back. I'm a technical analysis guy, but the story is always interesting to me too. It's the secondary piece of the puzzle. Technicals are always the first. There was a TSA report out last week that said they're coming back through like gangbusters. And he was on a plane recently and said it was pretty full. So, the channel checks out there. Yeah.
As a matter of fact, I was on Southwest Airlines about 2 weeks ago, and every seat was full. Obviously, it's not the middle seats. You got to leave those open right now, but every other seat was full, and the airport was pretty crowded. So maybe things will get back to normal with these airlines.
I hope so, and that's why when we get to my positions, I don't want to get shaken out of these things. I think they're going to be okay, but most importantly, the chart's got to confirm the story. If you're not a long-term holder, if you're just a swing trader, the chart has to confirm the story. It's different if you're a long-term position holder, because you're going to have your ups and downs. All right, so that's really the game plan for love. Let's see what happens with the declining 200. It's nice to see it going in the right direction. Maybe they'll make it easy on us. Maybe they won't. Let's see, where do we go next in my little repertoire here? So let's talk about, there we are, the pre-market filters. So this is where we're going to talk about, I had a couple people recently ask me, and it makes you kind of realize, well, maybe this is something we should talk about if traders aren't aware of it. And so let's do the properties, show pre-market. And so let's maybe find something that was a little bit crazy in pre-market. So there's the pre-market high in Tesla. And let's say we wanted to find a reason to go long Tesla, but we wanted to make sure it took out its pre-market high. Well, we can do that. And the way in which we do that, it has to be an alert filter, because we can't really do this on a top list, because you're going to be using, actually, no, you can, I guess you could do it on a top list. I take that back. We're going to use an alert window for the sake of it. What you would do is you would go to search and pre-market, pre-market, there we go. Just type pre-space M, and you'll see two of them there, below pre-market high, all right, and above pre-market low. Well, they're kind of goofy. You can kind of get yourself twisted, and so I'm going to show you really the best way to do it. If we add this filter, like so, and we put in negative 0.01 cents, don't ask me why, but we press this button here, this will give us things in the regular market where the price is at least a penny, and there's our operative word, above today's pre-market high. So for those that might want to not participate in a stock until the stock has taken out their pre-market high, this is how you would configure that. Just grab the below pre-market high filter, and the maximum value becomes negative 1 cent. I don't know why, but if you just do regular positive 1 cent and you read this, it's just totally confusing. It could be above, it could be below. So that's the way you want to do it. Now, conversely, let's go grab above pre-market low. So maybe people who are like short selling and they notice that there was a support level in the pre-market at a certain level, you don't want to participate in the regular session until you know that that pre-market level has been taken out. It gives you maybe just a little bit more comfort, and that's part of your method. For those people, you would use this filter. And believe it or not, I believe you would do the same thing. And don't ask me why. I'm not good at math. Negative 1 cent in the max gives us the price is at least 1 penny below today's pre-market low. It's magic. I don't know how it works, but you would combine this with a new low in the regular session. All right, so, go ahead.
That doesn't make sense.
Yeah. I'm telling you, it doesn't make sense.
When you put it in the negative one in the
okay,
in the below pre-market high. No, below pre-market high, the same way you just did.
I'll correct it.
No, in the max.
In the max?
Isn't that the way you did it previously?
Well, okay, for stocks that are making a new high on the day, below pre-market high, if you use negative 0.01, and the system is going to give you things that where the price is at least a penny above today's pre-market high. That's what we want to see. I know, that's what I'm telling you. That's why I keep saying, don't ask me why. I can't figure it out. And okay, Dave's probably right. In this case, two negatives. I told you I suck at math. Okay, so you need a new high, and you need that setting right there to see stuff making new highs and filter out the stuff that's not above pre-market high. For lows, you need a new low as your event, and you need a maximum negative there.
That one makes sense too. Yeah, that other one doesn't. It's weird.
Okay. Well, it is what it is, and that's why, Andy, I decided to make this content today.
Yeah, good, and I'm glad you did. I learned something.
Because that was confusing, and I really can't explain why. All right, so let's look at, let's sectors, and I'll show you a couple on in sectors. So we'll just kind of breeze through a few of these until I find something that is interesting. Solar is bouncing. Semis are semis are strong. Look at how they're bucking the rest of the market there, you guys. That's very interesting. Okay, the NASDAQ has that going for, and the semiconductors are a big component. That is a plus sign, whereas the NASDAQ can't get above, the semis can. IYR, that's commercial real estate. The story, I wouldn't buy that story in a million years. I was just discussing with Andy here in San Diego how the traffic is at least 25–40% less than it normally is. These giant intersections where you and I used to work, it'd take us 30 minutes to get on the freeway. It's 2 minutes now. It's night and day. So commercial real estate suffering. I don't think I really want to be along. Here's the interesting one. Did you know this, Andy? Did you see this?
Wow.
Yeah.
Interesting.
Very. For some reason, the steel is breaking out. And, you know, obviously it's been beaten up, but we'll talk about X. I got back in X. I'm in X. And but interestingly enough, let's just keep that on our back. Actually, no, let's explore that right now. Let's say I bring up something like STLD. Not X, but something a little bit more obscure, STLD, or maybe even, what's another good new core IR? Okay, let's bring up new core, all right? What you do is you come to the single stock window and you go to the similar tab. All of a sudden, what we're doing is we're doing a top-down exercise here, all right? We're doing a top-down exercise. We're starting with the sector, and this thing just caught us off guard. How the hell did we miss steel looking that good? Okay, let's bring up the steel stock new core, and let's start going down, you know? Probably a lot of these don't look great, but some of them actually might. And this is a way in which I've actually found a couple of swing trades recently. So there we go. Don't freeze up on me, system. Come on. Nah, there's our friend X, which I'm long. I'll talk about that. Okay, there's new core. Surprisingly, I'm not really seeing as many good charts as I thought I would see. So I'm not quite sure what that SLX is keying off of, but nonetheless, that's a good looking daily chart. Let's continue. Technology is going to,
sometimes they have some ADRs and those things that could be performing very well. I don't know, but
yeah. Well, nonetheless, it got my attention, and I'm going to keep it. Technology looks just like the Qs. Software is going to look like the Qs. China, we'll just leave them out of it. I don't think biotech's going to have a big, strong chance. As a matter of fact, if you wanted an opportunity to short biotech, that might be an interesting one right there. That big old exhaustion wick right there at the 50. I don't know. Not bullish on that. But as we start to get in, there's the SPY. We looked at that. We looked at the airlines. They're hanging above their moving averages. So we're long. We're good there. OIHs look terrible. The oil service. And okay, so I want to talk a little bit about, again, when we go through my positions, I'm long GDXJ for the mere reason that I feel this long, protracted wedge is being broken. And today was, whatever, I'll take that close. I don't care. I'm in it for the bigger picture. But gold and silver, I don't think you want to lose track of. This silver, boy, it's just been threatening. It doesn't want to get much below 2450 on the ETF. Don't lose track of that. Home builders, been looking strong. I've been hearing a lot of stories of fear of missing out. I know at least 3 people in my personal life that are chasing offers and getting outbid on houses out there right now. And I can tell you one thing, being a student of price action, it doesn't matter what the market or the asset is. Eventually, that's going to wear out and the music's going to stop and it's going to correct. There's our gold. Gold's looking really pretty, even more pretty than silver technically, because it's sitting on top of its averages. We have our treasuries, we'll see if the market gets weak, maybe those will get active. Retail looks like it's on the other side of the mountain to me. It's got some fighting to do to get back through there. Energy looks horrible. And then we're going to come to XLF. This stuff is just garbage. And in another account that we trade, I got long the inverse ETF today, FAZ. And this is why we saw Citigroup. I said, I promised you we'd come back to this. Some of these banks just don't look strong. BAC is under pressure. Then you start to get into the regional banks. Nothing to write home about here. It's below all moving averages again. And national banks also below. This is a very ugly looking sector, and it would make sense with the zero interest rate environment there's just not much to do other than hammer their customers on BS fees, things like that. They're probably barely hanging on right now with their mortgage originations, other than the let's do this. We'll go ahead and go through, oh, I've got some alerts, that's right. I couldn't really find that many, but we'll set a few here. And let's clean out the alerts so I can share them. Is actually from the jam down by today. Semiconductor. What did we just see about semiconductors? They're hanging pretty tough. Looking at this chart, I'm going to go back to yesterday's high, eyeball it, and we're going to create an alert there. We'll give that one some room. Get back on the detail there. The next two are from the A table. There's not much in the A table. I don't know why. This is the first one, LVY. Never heard of them. I don't know what they do. Live entertainment. Oh, agents and managers for artists. Maybe that's a good business. A lot of the things on this A table have been COVID stocks that are winners, and maybe the artists and managers and getting ready to start doing better. But nonetheless, I don't care what they do. That's a good looking chart. We're just going to go right there. New highs, new recent highs. Mark that up. Only because I like the name and we use the product, Zendesk, or we used to use the product. Again, I think it's another COVID winner, as companies are just, that's what I just talked about, 25% of the workforce is at home, and they need these kinds of products to measure performance and, of course, support their customer base. Bit sloppy. I mean, this one pulled back to the 20, and it's a bit hung up here, but if you can get back and close above, I'll just mark that one up. I mean, this isn't a perfect one, but I think it might have hit that backstop of the 20, and it worked off that big push. I think it could be a winner. The last two I have are from that one that Andy designed. As I said, the revenue growth fishing. There's a couple of interesting ones on here. And so a washout wick, it's back above all its moving averages. I think maybe a little move above today might be worth a look. Never know. And then lastly, NIPS from the scan, revenue growth. These are revenue growth companies. Did I not do that right? VIPs. Look like N. Really nice bowl. Look at this 200-day and how much into play this thing is coming. If this thing can't break below the 200-day, and if it's a revenue growth company, as it should be on this scan, this might be one to watch, and we'll pop it up here above today's highs. So I will forget. So before I forget, we'll hand out these 5 price alerts to those that want them. And we'll do it the right way. Share. Copy all. All right, I'll drop that in the chat window here for the GoToWebinar chat people. It'll just be the cloud code. And those are the alerts that we just set. You can lock those into your alert window as well. All right, so let's do this. Let's take a look at what I'm in, since we haven't looked at that since the last 2 weeks. All right, TGB, as you know, has been my workhorse. A little funny story on TGB. Maybe some of you might remember my original position was down here. Why is my position now here? Because on this day, I sold half up here like I like to do sometimes, and I bought that half back cheaper back here yesterday. So my average has moved up. This thing is probably my favorite stock in the entire portfolio. It is gold, silver, and most importantly, copper, and steel is strong today. I don't know, guys. I just got a big, strong feeling about the metals. Next position in my portfolio is still long from a while back here. It's a silver stock, and this one's actually one of the stronger ones of my silver. Actually broke out and closed on pretty good high today. Not on highs, but still a good candle. Okay, this is a great story. How did I find this silver stock? Well, I was playing around with silver stocks, and I'll just pull up a random one, Cordia Lane, that's not doing that as good as the others. And then I went over here to similar. Wouldn't you know, I found, doesn't look like loads on there, but for whatever reason, I found LODE using the similar tab. I looked at it and I bought it in about 10 seconds because I'm bullish, and it was, I'll show you the day I bought it. I need to click back in so you can see. There's the day I bought it right there. Anticipated that move sideways, and then it's been performing very well. I just noticed it was really holding beautifully off of the 20-day moving average. I want to get some exposure to small cap, micro cap mining companies. I think they could have some more bang for their buck, which is a perfect segue to gold, juniors, the gold miner juniors, not to be confused with GDX. If we look at GDX, it's a different, little bit of a, oops, I'm sorry, I have to type it into the chart here, GDX. If we look at GDX, that's what it looks like there, but GDX junior, a little bit more in the last couple of days, a bit more upside volatility, and that's usually the case when the attention comes into the miners. For some reason, the junior miners seem to have a bit more. So if I click on the amount, you can see I was a bit underwater, really needed this day to hang on. 2 days I was tested there. I closed above the 50, and I just said, I just don't see these things closing below the 50. I'm going to hang in there, and I'm still long. Another silver stock, been long since way back here. I've suffered positive, negative, positive, but I'm in these silver stocks for probably a long haul unless something really happens. JetBlue, we talked about Love and Southwest, our trade of the week, and we looked at the airline chart. I really don't want to sell this one, and as you can see, I've only been in recently. I'll give this thing way down here to the 50-day probably at some point because I feel like it's a generational low. Silver, the ETF, I'm in that one as well and been in it for a while. I was participating back here, sold my positions up here, and then didn't want to get too greedy and got back in pretty much on a bit of a pullback there. And then this is a fun one, X. I was long forever. You guys might remember, I was long way back here, and I just got tired of it because guess what I did? I adhered to my rules. I said, once they close below these moving averages, I'm out. Well, so I sold up here around 750, and you can see I bought it back at 736. Why did I buy it back at this ugly chart? This is why, because I noticed steel. I just didn't even think twice. Pulled it back up and said, I want to be back in this thing. 2 more, and they're just kind of flat. Another silver stock, GPL, and IAG. One thing I do want to say, there was a crazy stock that I was in for a couple weeks, UAVS. Probably one of the best story stocks one could come up with. The story of the Amazon, Walmart, big box delivery drone, last mile, giant, delivery system. Amazon hasn't come out with anything yet. Everybody believes in UAVS that they're going to be the one getting the nod. There's probably good reasons why. But I got out, and I got out because the chart told me to. The chart has now not confirmed the story. The story might be there, but the crowd doesn't really care at the moment. This is the line that it couldn't give up. We now have 2 days under the 50. There's no reason to be in this thing. I got out. The concept is you can always get back in. Maybe you miss a morning move, but if you're on top of your game, just jump back in. If there's news. And for those of you who were here with me 2 weeks ago, we played the time machine game, and we went back on a lot of these small caps that people get married to. And more often than not, I think I showed you good examples that if you adhere to this rule right here, where they start closing below those key moving averages, the story is no longer being confirmed by the chart, and you're best off getting out because it'll start bleeding you day after day, and that just sucks. So that's all I've got for my little swing portfolio and what I'm thinking about it. Obviously, I'm disgustingly, probably irresponsibly overweight in gold and silver, but that's my prerogative, and I know that I can manage these things correctly if they don't work out in my favor. I'm up pretty good for the year, outperforming everything else, so I'm playing with the house money. So now we got a couple of minutes before we bring Scott back. If anybody wants to have us look at a couple charts real quick, we always kind of tap dance our way out of here, looking at somebody's favorite pet charts. And forgive me if I'm brutally honest, I don't know the story that you guys know, but what I can do is give you an unbiased look as to what the crowd might be thinking out there in Chartland. So we'll wait and see if something comes through. Otherwise, we'll bring in Scott. eBay. Okay, it just took a second. All right, we'll do a few. eBay. I like the story, but the chart is not confirming the story at the moment. Not much else I could, but maybe Prime is eating the pressure there in that chart. ATPS. Good looking chart. You're involved in moving day today. Let me suggest this. Tomorrow, you might take out and blow out this high back here. And before noon lunchtime Eastern, you might start maybe thinking about taking some profits if you're a short-term trader. If not, just be aware that a day and a half might be the push on this thing. But that's a good looking chart, and look how it exploded nicely out of that consolidation right at the moving averages. Let's see. Okay, hold off on the charts. We got enough. DKNG. Looking pretty good. Day of rest. You'll either have a go, pause, go tomorrow, or you're in for a couple days of maybe sideways action, but all systems are go on that one. That looks pretty good. JNC. Really looking good there. I don't know what your time frame horizon is, but if you feel like taking profits, you got a lot of space between this moving average. It might have a date with this thing in the next few days. Good looking chart though. I mean, if you participated in that. Sure, Lulu. Lulu is definitely under pressure. I don't want to say it's broken, but it's definitely under pressure. Yeah, I mean, I think what Lulu could probably do is going to come right back up and bounce right back up into these crossing moving averages, I think.
And what I don't like about it is it's trying to bounce in kind of no man's land. There's no real strong support there. So yeah, you got to be careful trying to play a bounce in that. Look at all the red candles in the last 2 weeks. And so you
probably looking at this congestion right there.
Yeah, there's a little bit there, but nothing real defined. It's just kind of a mangled congestion.
It's probably due for a relief bounce, but you're going to have to see what happens when it kicks back up to the underside of that blue line. All right, to CERN, then Apple. CERN is just kind of a mess, just waiting to do what it's going to do. I don't really see anything either way on that one. No harm, no foul. Apple. Apple's going to look just like the NASDAQ. It's the same thing. It's being corralled again by this declining crossing moving average. If it can get back above these averages and close, then it's going to do okay. Coke, good. Today, actually, you know, you'd probably want to look at Home Depot too. Very similar. They're very much going to be mirroring the home builders. That market's on fire. I don't know if I'd jump in and buy something like Lowe's today. You know, screwed up the. Why am I drawing a blank on Lowe's all of a sudden?
LOW.
Thank you. Yeah, I wouldn't run in and buy. It's, you know, maybe it's probably going to run into a lot of resistance there. Let it gather some strength and get a hold of the battering ram. Lulu is just kidding. Oh, thanks for wasting my time, Mike. Just kidding. I can say that to Mike. He knows. Coke. Okay, so FCX. Well, I'm going to like FCX because I'm long TGB. Copper. I'm bullish copper. Square. Probably. Look at how it held the 50. So there's your downside support if these things break the 50, which seems to be the case in the indexes and a lot of these charts. You know, these things work because everybody looks at them and algorithms are programmed to use them. So that's why they work. A couple more here. Tyson Foods. Pipe. Not bad. You know, it's definitely also holding its 50, but very range bound on that one. Rocket. Andy probably wants to talk about Rocket. What do you think about Rocket?
You know what? I like the story. I know they're just killing it. The earnings report was good. I'm actually in this one. I took some profits before earnings, but I held some, and I'm underwater in some. And I'm if it breaks the lows of that range right there, I'm dead out because it should have bounced right now. And once again, I thought the earnings and growth is incredible. They're doing a lot of the right things, but I just, I start seeing these financials rolling out of bed. It's a mortgage company. It's got to be in that same area. Yeah, so I don't like what I'm seeing, and there's my drop dead price on that below that range. Very easy out right there. Yep, right there.
Okay. All right, so I'll look at SSTK for Jeff, ATVI for Steven, then we're done. We'll bring in Scott, and if Andy could, he can answer Sanjay. Maybe give Sanjay the ebook. And Sanjay, in that ebook, the A table is my favorite swing trading scan, and the book tells you how to apply it and how to look at it.
This answer, go to the, Steve can point it out in the, go to the Trader's Vault. And what you're going to see is that last row there in the Trader's Vault. There's going. Oh, thanks, Steve, for pulling that up. So that last row at the bottom, not looking at the compare count, all those are great little swing traders. I love that bullish candlestick daily. There's the revenue growth fishing that Steve was talking about today. Pull back above 50. So check all those out. That whole bottom row can be great little swing trading alerts.
Where's the A table? Is the A table on here?
The A table's in there.
Okay.
Yeah.
So what you do is if you don't know, you right click and you just say save the cloud. save, and then you're done. And then you've got, each individual save for each individual. And then you want to go back to your normal layout, and then you would just load that strategy from the cloud. And so that's a much better way to get you what you're looking for. But still, take a look at that e-trade, that's ebook for swing trading if you can, because we explain a lot of concepts in there as well. Okay, so the last two charts, and we'll bring in Scott, is SSTK. Hey, looking pretty good. It had a nice day today. It looks like it's trying to move up and out of that range. I think I would expect further follow through on that one. And then the last one, ATVI. Yeah, it got caught up in its web today, but it looks like a lot of things. It's going to have to resolve itself and work its way through. Just be cautious that there's a lot of selling right there at the high end of this one. Is the Traders Vault swing trade layout shared? That's basically just a palette mark of ideas, and you just grab the ones that you like individually. And then if you wanted to, let me just end on this before I bring Scott in, okay? You could come down here and you could go to Traders Vault, and I will not dare do it because it will overwrite my layout. But if you wanted to, there's a lot of scans in there. It might be a bit memory intensive. As you can see, it took a bit to load. But you could make that your layout. All you have to do is this: File, Save Layout, and I'm not even going near the button. Make it your default layout, and then every time you start the program, you'll have that palette as your ability, and you can close, open, save, reconfigure, do whatever you want to them. All right. Okay, that's enough for today. The ebook, I will drop that, Dave, while Scott's talking, or maybe Andy. Do you have a link to the ebook by chance, Andy?
I don't, Steve.
I do. Let me grab it. Let me grab my little cheat sheet here, and I will drop it in the chat window for everyone to enjoy. And we'll have about 30 or 45 seconds. And chat window ebook. And there is the short link to our swing trading ebook. And thanks for everybody's participation. Let's bring up the slides and bring Scott back.
All right, thank you. A couple things before we close out. We've got an ebook all about earnings season and how to use it to your advantage. So go ahead and grab that. It's free. It's also got some cloud links for you to add to your layout. Trade-ideas.com/earnings. It's an easy place to go to grab it. Trade Ideas podcast. We should have some more episodes out soon, but we've already released some good ones this year of interviews. So do check out those interviews by searching for Trade Ideas podcast wherever you listen to your pods. Add us as a subscription to get the next one delivered to your device automatically. Summertime is a promotional code that'll save you 15% off the first month or year of any subscription or upgrade. So grab that and use it to start a new sub or upgrade from standard to premium. Steve Gomez can be found on Twitter at Today Trader. Also have at Trade Ideas Pros, our Facebook handle to follow and like stuff and share stuff with your friends. And email us, info@trade-ideas.com with any of your questions. That goes to our help desk and gets you the best answer as quickly as possible. Thanks, Steve, Andy, and all of you for joining us. We'll have the recording up later on tonight or tomorrow. And you get an email reminder tomorrow from GoToWebinar with a link to the playlist.
All right, see you next time.
Thanks, everybody. I'll see you Thursday.